We have 3 outstanding companies in our FinTech group, so please welcome the judges and the moderator for this group, Brian Blacklock of Execustaff HR. Come on up.
Good afternoon, everybody. My name is Brian Blacklock. I work with Execustaff. I've been there probably about 12 years. SV Forum has been there pretty much the whole time that I've been there. What we are a single source solution to handle all payroll, benefits, and HR administration. It just makes a big difference when you're hiring top talent to make it makes a huge difference when you're, hold on, let me look at this one more time. Sorry about that. When you're seeking top talent, it makes a huge difference to be able to offer a comprehensive benefit package, including 401k. Not only that, our clients have the confidence knowing that we have a HR and payroll team that will serve and advise them while their business is growing. So that's pretty much what we do. Judges, do you want to introduce yourself?
Sure. I'm Brian Ascher, a partner at Venrock. Venrock's one of the oldest venture firms in existence. We were originally the venture arm of the Rockefeller family. Today, we invest broadly across IT and life sciences, mostly at the early stage. I've been there 18 years. I invest broadly, but with a particular emphasis on FinTech, which is near and dear to my heart. Prior to venture, I was product manager for Quicken at Intuit many years ago. And I've led investments in wealth management, lending, and insurance in the FinTech space.
Hi, I'm Rebecca Kaden. I'm a partner at Maveron. We're a consumer-focused early-stage venture capital firm, originally founded by Howard Schultz, who's the chairman and CEO of Starbucks, but not a strategic of Starbucks. We focus on direct-to-consumer, technology-based businesses, of which FinTech is a significant part of that.
Hello, everybody. I'm Gaurav Tewari. I'm Managing Director of Citigroup Ventures, which is the venture capital franchise of Citi based here in Silicon Valley. We invest across several broad sectors from the dual lens of financial viability and return, but also strategic impact and relevance in terms of our ability to work with a company, not only within financial services, but really across the broader ecosystem of Fortune 500 enterprises. The core sectors we look at, FinTech certainly is a big part of it. We also look at enterprise applications and infrastructure, as well as commerce and marketplaces.
That's good. Let's go start with the first company.
All right, so coming to us all the way from down under, Australia. Please welcome Graeme Speak from BankVault.
I'm Graeme Speak, the CEO, founder of BankVault. Sorry, I've just got a mental blank already. Sorry. My team and I have been developing cloud computing technology for the last 20 years. We created a thing called Rainmaker, which 2 years ago Stanford University was looking at rolling out as a pilot. What Rainmaker did was build a new virtual machine every time you logged in, which basically means your IT is now future-proof. And we compressed about 40 minutes worth of work into 2 seconds. So we overcame another really important problem called the boot storm problem. We were getting sales, a typical sales cycle was around 10 months. The pivot of that technology to this product, BankVault, has given us 1,000 times leverage on what we were doing. We're now selling the same product for 10 times the price. It's costing 1/10 or less of what it was. And that 10-month sales cycle is now 10 minutes. Sorry, I've got another blank. This is now applicable to every individual and every organisation on the planet that is doing any sort of transactions online. So BankVault stops bank account hacking. We secure transactions by building invisible endpoints that simply bypass hackers. This is a completely novel new approach to thwarting the problem of hacking. And this actually applies to a lot more than just banking. Because whatever you're doing online now, your device is secure, anonymous, and untraceable. There's all sorts of new applications for this. So we know that hacking is a major problem, and a small team of 2 or 3 guys can now leverage to 1 million PCs. This is considered a $500 billion problem today and expected to grow to $2 trillion in the next 3 years. That'll be concentrated on the first world countries. It'll be concentrated on the small to medium enterprises, which are the bulk of the economy, representing trillions of dollars of opportunity. Just looking at Australia as one example, we registered $1 billion by our government. The head of Cisco's cybersecurity team, who consults to our Prime Minister, says the problem is actually 17 times larger than what is reported. 65% of victims who lose money online, according to Kaspersky, are never reimbursed properly. And we know that insurers are now withdrawing because they can't measure this. They can't measure how much will actually be hacked or where the problem will come from. What an insurer can't measure, he doesn't want to cover. So the end point, PC and smartphone, is the major point of most attacks. We say 1 to 5, 1 in 3 people have actually been hacked. The SMEs are the soft targets because these guys are clueless about what they can actually do. 1 to 5 to 15 PCs, and security is the last thing on their mind. We think our timing is perfect. I believe timing is now considered the most important ingredient for success of a startup. This is in the media every single day if you look at it, certainly the mainstream once a week. And we know that the banks now no longer want to keep reimbursing like they have. Financial Times announced yesterday that the banks, including with the Secret Service in the UK, are talking about actually now stopping this, making customers responsible. So from the bank's point of view, the problem is actually the customer. It's not their system being hacked, it's always the customer's PC and smartphone. They give us 2-factor authentication. This is a little SMS text message to your phone, or a fob security device. In every cyber heist that we know of, this system is defeated. As a consequence, the banks want to investigate, and that delay is the pain point. It means you can't make payroll today, you can't buy stock, you might be technically insolvent. The solution is BankVault. BankVault is this little tiny device here. It's your key. Your BankVault key you insert into your PC. It can only do one thing. Talk to our data center. There's a micro operating system on here. You've got a username, password in the data center, looking back expecting this operating system, and we construct a hardware secret from your PC that's completely unique and can't be duplicated. We go out, that gets you to first base. We go out to the internet, we choose an address at random, we build a virtual machine there. We compress, as I said, about 40 minutes worth of work into 2 seconds. It's a pristine machine, it has never existed before, can't possibly have been hacked yet. That becomes your endpoint device. You do your banking transactions or whatever else you're doing from that, and as soon as you finish, the whole thing evaporates without trace. Whatever you're doing was now invisible and out of reach to the hackers. This gives you immunity from every attack vector that we know of and can even think of. We think it's an absolute solution, but we wouldn't put that in writing because you just never know. The products, we sell this for $100 a month to businesses. We're getting sales. Our cost of goods sold on that, almost $3,000, is about $10 over its lifetime. It's extraordinarily profitable. We've got just last week released BankVault Professional, which runs the software on your PC. It's not an absolute solution, but it's a pretty damn good one. Again, our cost of goods sold on that is about 20 cents. And we've got a light version which runs in a browser for the average consumer. Our focus is SMEs and banks. We're just employing right now a guy who's the top cybersecurity banking guy in Australia, who set the security teams within 3 of the 4 leading banks, joining our team to get banking sales. We're focusing on SMEs through the internet, through the business associations. We inherit the credibility of the business association. Or channel partners like Australia Post, Xero potentially, who we inherit their credibility to overcome that fear about who are we. The profit margin, this is just one tiny market, which is Australia. This thing scales globally. Sorry, okay. And
my first question is the hardware device absolutely essential? And if so, what gives you confidence that that's not too much friction or inconvenience for the consumers to adopt widely?
it's not, and this is not targeted at consumers. We have a web version which will do that. It's click and go. We've got a software app which you can install on your PC, which gives you a much better experience. It's like about 1/10 of the bandwidth. This experience is really snappy and has printing and a bit of storage. This is the absolute solution for the people who are paranoid and absolutely must guarantee. It doesn't even leave a trace on the machine afterwards.
What kind of traction do you have so far, and where is it piloted, and what's the kind of strategy to grow the demand side?
Yep, great. So the web and the software version we just released last week. We've got an announcement throughout Australia and some of the press, which is great, so sales are trivial. On this device, we did a series of experiments last year. We have about 30 customers on this, which netted about $70,000. The previous generation of the same technology, we grew to about 16,000 users worldwide and about $250,000 revenue a year. So this is so much easier to sell. I can sell this in 2 minutes. My fastest sale was 3 minutes. My second fastest sale was 5 minutes. And we can scale this out online now. It doesn't have to be done through salesmen. And what we're looking for really is a large bank or a large, like someone like Xero or Quicken to actually take it on and provide it to their clients.
Where are your virtual machines being hosted and how secure is that construct?
Right, so we have our own data center. It's our own equipment in our own room. It's in Australia. We can scale it out. We can put nodes in anywhere around the world now. 2 years ago in San Francisco, it would have cost me $500,000 to put a footprint here. Now it would cost me about less than $1,000 a month to support maybe 2,000 or 3,000 customers. It's so lightweight and we can scale it out very quickly.
So what makes this hard for someone to replicate? Because essentially you're creating sort of a unique encrypted channel to a virtual machine.
Yep. So conceptually what we're doing is very, very simple, and I think that's why it will stand the test of time. We're building a brand new endpoint at some random address. I mean, that's always going to be relevant to someone. To do it is actually really hard. There's a lot. There's like about $5 million investment in here, years of work, and okay, it's easy to come along and just leapfrog, but this has got to scale massively, and it's got to be absolutely bulletproof. It's hard to do. And we've got patents around it too, so 2 patents.
I think just on your question, Rebecca, what's your distribution strategy to get scale? Is it to sell direct to consumer, or are you using any channels?
We're going through an online strategy now, just to go direct, but the real goal is to be partnering with large organisations, banks.
When you go direct, do you have a sense of how much it costs you to get a customer?
We're trying to work that out at the moment, yep. So we're getting a fair bit of publicity through the media in Australia. That's just drawing in inquiries and converting customers, which is kind of cool.
And is the goal to keep the market in Australia for now, or how do you look at jumping over?
We're ready to jump now. We've been spent last year validating this. It's of 10 business owners, our target is business owners. Of 10 people you speak to, these guys are hearing about it in the news every week now. They're concerned. 40% are concerned, 20% are probably ready to do something now. You talk to the cybersecurity guys, it's this cloudy stuff, no one knows what to do. Okay, this is simple. It's dead simple. Put that in your machine and go. You can buy it now, get going, you're done. That's how we're getting such cut through.
Cool. Thanks, Graeme.
Thank you.
Well done.
All right. So next up, coming to us from France, please welcome Olivier Cechura, FAMOCO.
Hi everyone, my name is Olivier Cechura and I'm the co-founder and chief marketing officer of FAMOCO. FAMOCO, we are the emerging leader of Android transactional devices. We raised already $6 million in 2 rounds. We have 40 employees in the company, 170 customers all over 25 countries. Think about this big revolution that is happening today. There are over 10 billion contactless cards in circulation, just like your Clipper card or your smartphone when you do Apple Pay transaction, or even your passport. And Juniper stated that in 2020, digital transaction will reach a total of $8 trillion, which is amazing. And you know what? 60% of all those transactions will not be on the payment scheme that you may know, like Visa, MasterCard. 60% of all this amount will be done on application-based transaction. Application-based transaction is basically in 2 different markets. First one is mobile payment, and the second is urban mobility for transport. For that, you need to create a network of acceptance. You need a reader. And today, you have basically 2 options. First one is to use a Verifone point of sale device, which based on proprietary platform. It's costly, very secure, but the problem is not unable to keep up with consistently business requirements. And on the other hand, you can use your smartphone, with a square dongle. The problem is that it's not that secure, and they charge a huge fee in terms of transaction. We at FAMOCO, we do not have, you do not have to choose between security and flexibility. We have created the world's first secure Android NFC reader, which is this one. We bring the power of Android in a secure and managed environment. It comes with bank-grade security features, with a secure Android OS, and a built-in device management platform in order to take the control of the device over the air. Our secret sauce, I will tell you, is bringing security and versatility at an affordable price. It's the only way to create this large-scale network of acceptance. Business model, very simple. We charge $100 per device, and a license fee, $1 per device per month. We do not take a cut on the transaction, which is very important. So we do not charge any transaction fee, which makes ourselves very disruptive in the market. Let's take 3 examples. First one, it's PayPal. It's one of our customers in Europe. They are using our device for cashless payment in music festival. They give you a wristband, you top up money on it at the entrance, and then when you want a drink, you just tap and drink. 1 hot dog, 1 beer, it's as simple. In university, we provide a completely wallet solution for students, and urban mobility is the same with the Clipper cards. You can see that the three use cases, they have a common denominator, is that all the transactions are application-driven. We are planning to raise a Series B, 15 million US. Half of it, it's already secured by our actual investors. In terms of revenue, last year we had $3 million US, and this year we are on target. We are on track, to reach $10 million US in terms of revenue. FAMOCO means fast-moving company. This is exactly what we do, what we are. Come aboard. Thank you.
Thank you. Start with Rebecca.
Sorry, start with me? What has the kind of sales cycle been like to get customers, and what kind of pitch gets them to try it? It's hard to get people to switch from what they're used to doing.
Okay, so our customer is the local IT companies, or like Clipper card in the Bay Area. They want to expand the usage of their card, and they need reader in order to interact and to create those new services. So our direct customer is those IT companies that are involved in this area.
And what are they using right now that they're switching from?
Today, they are not using anything, because what you can do with your Clipper card is just to take the public transportation. You cannot use that for the swimming pool, for example. You can. You know what? It takes me almost an hour yesterday to recharge my Clipper card. I was in San Francisco downtown, and I was not. I didn't know where I could charge it. With our reader, you can give that to any merchant, and they are able to recharge, to top up credit on the Clipper card. So it's a way to expand the usage of this card. This is one of the examples.
Nicholas, that's helpful. Can you talk a little bit about the competitive environment, and also, it's interesting, Google recently launched hands-free, right, which is also an NFC-based payment system. I don't know if you've looked into that yet.
Yeah, okay.
And the key difference there is, right, it leverages your existing device versus what I think is a new device, right, in your case?
So we designed the device and the complete solution. Can you repeat the question, please?
Yeah, so the competitive environment.
Competitive environment. As I told you, today we do not have, because we just launched 2 years ago our product, and we don't have exactly what a competitor. Today our competitive landscape, it's like Ingenico, the big players like Ingenico or Verifone. They have a device that are based on proprietary OS, And for them, it's very hard to move to an open platform because it's not in their culture. So this is one option. The other one is the smartphone. It is like Square. You know, you can put a dongle or any smartphone, and you are able to perform transaction. The problem with this type of competitors is that they, as I told you, they charge per transaction. High rate per transaction, around 2% or between 2 to 3%. And this makes the things very difficult if you want to expand the usage of the card, because Clipper card, they don't want, to have 3% off of all their revenue.
What are your gross margins like, and what's the payback if the customer chooses the $1 a month model?
So today, it depends on the country. Today we have several deployments in Asia and in France, and basically what we see is that it's very difficult to answer to your question, because we are dealing with IT companies, and those IT companies, they do not really charge per transaction. So it's very difficult to understand, to answer your question. No?
Let me simplify. What are your gross margins?
Okay. So today, our BOM, our bill of material, is half the price as we sell. And the recurring revenue, which we charge, it's $1 per device per month. It's a completely SaaS platform. So it's around 50%.
Thank you.
All right, thank you.
Okay, thank you very much.
Okay, coming to us from Denmark, please welcome Christian Gabriel, CapDesk.
Hello, I'm Christian, and I'm the founder of CapDesk, and I'm very delighted to be here today representing Denmark, so thanks for giving me the chance. We are creating a marketplace for the world's unlisted shares. So a problem I've seen firsthand working in private equity for the last 4 years is something that might regard all of you, in particular if you're a shareholder in a private company. You might never see any liquidity, even though you have invested in a successful company. And I'm going to tell you why. The IPO markets have changed drastically during the last 20 years, and we are close to nearly seeing a fourth of the activity. And meanwhile, we haven't really done anything about the liquidity events while staying private. It's really expensive for a private company to do any liquidity events. And this basically means that we're all tied to private investments for indefinite time, meaning that you're not most likely going to reinvest again. However, I believe there's a solution. Let's see. We need to empower all private companies to do low-cost liquidity events while remaining private, and we need to do this now. Never before have we seen more private shareholders coming into private companies of all shapes and sizes, ever. And it's not going to change. Jobs Act is going to, once for all, since Wall Street, change the way businesses are built in the US. We're going to see a lot more private companies that are going to remain private and have a lot more shareholders. And Nasdaq just did a research where they said that 76% of high-growth companies are not planning an IPO. So this is big stuff. There's a market size of $250 billion that was invested into private equity last year. And we honestly believe that this drastically changing environment is something we can feed into and buy market shares. So what is our product? Well, basically, this regards a lot of companies here today. You as a company, we give you access to control vesting warrants, a cap table, a document sharing, news wall, signing, and shareholder votes. And then we allow all shareholders to get invited to the company table. So we show each shareholder what is your current dilution, how many shares do you have, and what's the price per share, and so forth. Then each shareholder can request a trade. I want to transfer 10 of my shares to my sister at the latest valuation, and the company can then approve or decline. And the beauty of all of this is that everything is verified, all payments and all authentication regarding ownership is verified through the blockchain, making us the first one to actually make a significant low price of making trades, also cross-border. So who are the team? Well, it's me and Casper, and we've been working with alternative finance for the last 4 years together as a team. And then it's Mikkel and Martin, who's been developing high-end software solutions for some of the biggest companies in Denmark the last 20 years, and 2 experienced business angels. Our business model is bold but simple. We charge only for the transaction a minimum of 0.2% and a maximum of 0.5%, meaning that everybody can get started right away. Our competitors are, most of you see the major guys like Nasdaq and the investment banks like Goldman Sachs. But more importantly, I would like to draw your attention to the new investment platforms such as AngelList and Crowdcube in Europe. The ones trading right now on the unlisted market is, of course, the OTC markets. But our biggest competitor is Nasdaq Private Market, who's right now trading employee shares for 1 billion valuation companies. But we believe we can go in and tap into this new environment. So traction, we have since beginning from scratch a year ago in rainy Denmark. Yes, it rains in Denmark at this point of time. We have now 120 companies on board. We've got 15,000 shareholders, all who have invested in companies onboarding. We've had 2 acquisition offers from major players out of nothing. And we've said no to both, and we've expanded to London, where I reside. So why CapDesk? We've got the ambition, most of all, we've got the technology and team to tap into a $250 billion market. We're scalable. I only contact companies with more than 200 shareholders, and each time I do that and we onboard a company, we get 10 new company invites. We're born global, we've got users from everywhere, and there's exit opportunities. So the last thing I want to tell you, if you're a shareholder in a company that's not going bankrupt, that's not getting eaten by a bigger fish or acquired, then come to CapDesk. Or not filing an IPO, then come to CapDesk or stay poor. Thank you very much.
That's great. I'm going to start with.
Sure. Great presentation, by the way. So if I understand the business model correctly, of the $250 billion market, your addressable revenue would be 0.2 to 0.5% of that, though, right? Is that correct?
Yeah, you could spin it like that. Yeah.
So how do you think about that? Is that, because that's kind of constraining, even that's assuming you capture 100% of the market.
Yeah, of course. I mean, we still believe that that a lot of the IPOs will begin in the private companies, and we believe that they could definitely take a chunk of that while doing it. And we believe that, we allow all companies to own their own blockchain, which is open source, and we believe that we can provide the tools to have a great volume on the platform compared to the current OTC markets, which only have about 100 companies trading, and it's very expensive. So we definitely believe in volume and open source, and that we think that's going to be the new thing.
Got it. And do you see a threat from the, kind of your bottom left quadrant in your competitive matrix, which is companies, because a lot of those companies are launching secondary mechanisms on their own platforms too, right? Yeah,
they are. And they're very much afraid of us because my sales strategy is basically contact them, their companies, and say, you know what, we've got the tools to manage all of this, and now we've got shareholders from across all the platforms using CapDesk, and they're coming back to CapDesk instead of the platforms. So we believe we can kind of get the shareholders who invest in their several platforms. We've got one who've invested in 9 different platforms on CapDesk, and we've got the different deals. Just really cool to see. Also because the numbers kind of spin up, like when they hear about how many shareholders there's in equity crowdfunding, we can kind of decline that number because we know that there's a lot of the similar guys. So yeah, I hope that answers the question.
You gave us a number of companies on it so far, but what kind of volume has gone through the platform and what kind of revenue have you guys seen? Yeah.
Right now we are not trading at the moment.
You're not trading?
No. Right now we are offering an equity management platform while waiting for the proper regulation to get an MTF regulation in Europe.
So that's somewhat of a different product. No?
Yeah, I think the product is itself. In order to do trades, we need to do all the tools we're providing for the companies right now. The trade itself is a verification of who owns what in the platform and a payment. So it is definitely the same product.
And what's the timeline for being able to?
It's Q3 2017.
Got it. 2017.
The competitors you had in the bottom left, the ones doing
Yeah.
deal making for the unlisted companies, provide a very significant value to their customers by doing the marketing and helping them generate
Yeah.
primary capital to grow the business. Your value proposition is not that. You don't necessarily provide working capital for the companies. Are companies highly interested in seeing their investor base turn over, particularly if it's going to be to smaller investors whom they don't know, who are now going to be holding preferred shares? It doesn't seem like...
I mean, an example is we've got a company from Finland, and this might seem really weird to you guys, US guys. We've got 3,000 shareholders, and they do 100 trades a year right now, and they basically sit and update and manuate because they want their shareholders to get off and in, not to get them to invest again, because then they can run a new round, and then people will be happy to invest again.
Have you investigated the laws here in the U.S. where if you have over a certain number of shareholders, and I believe it's 500, you're held to a higher level of reporting?
Jobs Act just changed it to 1,500.
To 1,500?
Yeah.
On the number of, on your market size that's going into private equity every year,
Yeah.
that number is relatively aggregated, right? Into
Yeah.
certain big deals. And those seem to be the hardest deals for you guys to access because the companies that are in the most demand and hardest. So how do you think about how big you can get working with the long tail?
I mean, actually, no, I just had a meeting in London before I left here with a big bag company, and it's actually a really cool story. So they make bags, right? And he's grown it to like a 150 employee company, and he hasn't traded his shares since. And now there's a big institutional investor from Singapore that wants to get in, but he's not raising money. And he still owns 70% of his equity. So what he wants to do is actually sell them a bunch of equity of his own one, and to facilitate that. And he's got several strategic investors who wants to get in. And we're talking about right now being one of the first trades on CapDesk. So I think it's pretty exciting. If you give them the tools, then they can actually take that in. It doesn't have to be a funding round, then it can easily be during and get equity out.
Got it. Cool.
Yeah.
All right, thank you.
Yeah, cheers.